All right, guys, I'm going to do a series of a few short videos talking about some different charitable giving strategies here. These are very, very useful, and I've used them a ton with a lot of different clients. And so I want to give you a really solid breakdown, but I'll break them into separate videos so they're easy to consume. So the first one is using a donor advised fund, or a DAF. Now, what a donor advised fund is it's a special investment account that is dedicated to donating money to charities. So it's an account that you control. Okay, you have control over this, but when you put money in, you get the tax deduction immediately. The money sits in the donor advised fund. You can invest it, or you can immediately, whatever, it can stay in there until you're ready to actually grant it to a specific charity. Then you can make the grants at the time of your choosing. Okay, so the way these work is, again, it's separate. It's a special type of account. So once you donate the money over, it is no longer your money. For tax purposes, you have donated that money. But it sits here and you still have some type of control over when and how it is dispersed. So what you do is you have this account set up. Most brokerage firms have these now, right? So I have one at Fidelity. Fidelity has a separate kind of nonprofit division called the Fidelity Charitable. So I have a Fidelity Charitable Fund, which is a donor advised fund. And Charles Schwab has it. Most firms have these types of accounts. You can open it and you can see it right there with all of your other investment accounts. So you can donate cash, or you can donate stock directly over. You get the full deduction for what you donated in that tax year. Then the money sits in the donor advised fund until you grant it to a charity. So as it grows, you don't get that growth. It grows tax-free because it's all going to charity anyways. And you don't get a further deduction on the growth. So you get a deduction for the value you contributed at the time of donation. And then it can sit in cash, or you can invest it and grow. But then you decide where it goes after that. You can grant the money to charities when they would actually then receive it. Okay, so there's two steps. You are donating or contributing to the donor advised fund, and then you make grants to charitable organizations. Okay, so really, really easy, nice way of donating. Keeps it very, very clean for tax purposes. So two main benefits here. Number one, you control the timing of the tax deduction. So let's say we're going to talk about batching charitable deductions, but let's say that you want to try and donate more in a given year because your income's higher, so you're trying to donate more, or maybe you're donating for next year as well. Well, you can put all of the money in to the donor advised fund and get the tax deduction that tax year. So you get to control the timing of your tax deduction. Second benefit is you control the timing of the grant to the charity. So maybe you don't want to donate all of that to a charity at that given time, or maybe you haven't decided what charity you're going to give to, or you have a couple and you're not sure on the amounts. Well, you can still, if you know you're going to donate that amount, you can still donate it. You get the full tax deduction, but then you get to control the timing and the manner of distribution to the different charities. So you can donate it, it can sit in there, and then after a while, you're like, oh, hey, we've decided we're going to do X number of dollars to this charity, X number of dollars to this other one. Cool. You can decide that a year later. It doesn't matter. Okay, so you control the timing of the tax deduction, and you control the timing of the actual grant to the charity. You can set up monthly distributions if you don't want them to send a lump sum to the charity, right? You can do a monthly distribution. You can do, again, split it any way you want, keep it in there for any amount of time, invest it, it can grow, and then you donate the growth, the higher balance. So you get a lot of control with this, but it especially is nice to control the timing of the tax deduction. Okay, so that's a donor advised fund. We'll move on to the next one in the next video.
Your future impact begins with today's decisions.